This is the video on the essentials of inheritance tax. It's a bit longer than I would have liked, but it is hard to distill this down into a short 1 minute video. So hopefully you stick around. Inheritance tax is a tax that's levied on your estate when you die and paid for by your beneficiaries. Everyone has an allowance of £325,000 where no inheritance tax is charged, and this can be passed on to your spouse or civil partners if you pass away. You may also be able to benefit from a residence nil rate band if your estate includes a residential property. This is capped at £175,000 and will apply if you are passing your property to direct descendants. It can also be passed between spouses. This means that in general, couples will have a combined allowance of £1 million before inheritance tax becomes payable. The rate of inheritance tax is 40%, so it is a hefty amount to pay on an inherited estate, but the rate can be reduced if you leave some of your estate to charity. There are plenty of reputable online calculators where you can assess if you have an inheritance tax liability by completing some simple questions. If you've identified that you have an inheritance tax problem, there are many ways in which you can mitigate against this, especially if you're young and you have plenty of time to do so. There are three main tactics to reduce your estate. The first one is spending money and enjoying your life. This has the added benefit that as you spend your money, it is reducing your estate, although you need to make sure that any spending is sustainable, and a good financial plan will be able to ascertain what level of spending is sustainable. The second one is gifting away assets, whether that's cash, investments, or property. You can give outright gifts, or for more complex scenarios, or where you want to maintain control of the assets that you're gifting, you can make use of trusts. Any gifts that you make over your allowance will leave your estate over 7 years, so that's why it's beneficial to start young. If you die within the 7 years, all or a portion of the gift can be brought back into your estate for the inheritance tax calculations. The rules around gifting can be complex, and estate planning using trusts is also complex, so it's important that you seek proper financial advice before you decide to use trusts or gift away any assets. The third method is insuring the liability with a whole of life insurance policy. This is a policy that's guaranteed to pay out a fixed lump sum on your death and is used by your beneficiaries to pay the inheritance tax liability. It's important that this policy is placed into a trust so it doesn't further increase your estate when the proceeds are paid out. There are some assets that enjoy some relief from inheritance tax. The most well known would be business relief and agricultural property relief. In this case, certain assets are inheritance tax free up to a limit, and also may be charged at a reduced rate of inheritance tax. If you're a business owner or a farmer, it's important to understand what reliefs you're eligible for and how you can use those reliefs in conjunction with your wider plan. Inheritance tax is a complex area of financial planning, but it's also an area where a proper thought out plan can have a large impact on the amount of your estate that you can pass on to your beneficiaries.